Good day, all. Happy Easter and Passover to all. Today is Sunday, and this is the 17th of April, 2022. I want to get this out because I will be out of town. I want you to remember that. Starting tomorrow at noon, and I won't be back until next Sunday at some hour. Driving cross country with my son, first time I've ever done that. And it'd just be the two of us on a cool trip all the way to Northern California. It'll take 3-4 days to get there because I'm not going to kill myself. But I'll do my best for my paid subscribers to get my updates out in the morning subscriptions and, of course, trade recs because I'll be keeping up with the markets. But I'm not going to be in the studio. So please remember that. Take advantage of our free offers while I'm gone. All you need to do is come right up here, move your cursor at any time. You'll see all the offers, take advantage of them, and we'll get you all set up. So in looking at the markets, one of the big events, obviously, right now is that President Biden has backtracked, and now he's going to allow, in some manner, we don't know all the details, drilling again on federal lands for gas and oil. That's a great move. I've been saying that his policy stinks, and I applaud the man for making that. He's being forced into it, but he's got to do that. And there's one other thing, Joe. You've got to do the pipelines, okay? If we're going to become a powerhouse to replace Russia and Europe, give us Americans the ability to do it and help our allies. How do we do that? Let's get that oil going down all the way as it should so we can get it to our ports, ship everything out, help us keep a lot here, become self-sufficient completely in America. Mexico's doing it. We'll probably do it now. And let's get smart about this whole thing. Then let's dial this all back in some manner that makes sense for a green planet. You can't just go all green, and you can't just go all, we're going to forget green either. So there's got to be a part to it, and no, I'm not running for office. But in looking at the markets, you can see you had a good day there. We know that what's going on now is the Russians have regrouped, and they're going to get more efficient with what they do. They're going after Mariupol, but once you don't have so many fronts to fight, it gets a lot easier in the warfare, and that's exactly what they're going to do, probably what they should have done from the beginning. As for looking at the grains, it's getting ready to get away from the May contracts now, so get yourself ready to move on, as the saying goes. When I take a look at the markets, you haven't had any moves on the upside in the S&P. Often, I've made that very clear, the month of April's the strongest of the months of the year for trading the upside in the S&P. Out of the past 25 years, 20 of those years saw April gains. And typically, on a seasonal basis, you go from around the 7th of April until the 29th, and the market will post close to close a gain. Hasn't done it so far in any manner, so I pay attention to that. By the way, when you look at all those things, it's one thing to say this is going to happen and you pick a spot on the chart and buy it. That's not what you're supposed to do. You wait for your other work to kick in. You know what the seasonals are. That doesn't mean they're going to work. Pay attention to that. On the E-mini S&P, what happened is the market rallied all the way up, and people kept saying how high this market's going, or we're going to go for the highs. And since then, the market has rolled back under the 18-day average of closes. When we take a look on a weekly bar chart of what we've got, you can see that the market here has got a pattern of higher lows, higher highs. So the trend is up. You filter the trend with moving averages. The 18-week moving average of closes is my line in the sand. I teach this in my charting course. Anything you're over with it, if the swing line is up, it's an all-go signal without looking, obviously, are you overbought or oversold, but using moving averages in the swing line, that's a buy signal. When you have a buy signal and the market's under the 18-day average, you're not looking to jump back in. Also, you're always looking at risk. And dollar risk to get long anything near 44.86 and put a stop at 41.38? No, that is not what you do. You wait for the chart to narrow in and give you a reasonable risk reward. Also be aware that every day that goes by and time runs out on that seasonal, it often means that once the seasonal to the up ends, the market picks up some downside. Remember those things. When we take a look at Bollinger Bands now, you're far away from them. The upper band's way up, basically at a contract high. I don't think you're going there. The lower band is at 41.92. It certainly can be hit with a bearish set of information. Momentum, though, is flat. So we have a market that's got the trend up, the bias down, is measured by where the market is in relation to the 18-week average of closes, and momentum's sort of flat here. I don't see anything to do. We then look at the Dow, and it's the same picture. You had this higher lows, higher highs right into the resistance of the 18-week average of closes. So often you'll get that. You come to the end of a move. Example, clearly, lower highs, lower lows, all the way through. And this began here at the beginning of the year, ran itself through right here, March 11th, and then in this week, you negated that pattern. Suddenly, you have a higher high, lower low, and watch it swing gears now, right there. And if the market can close over the 18-week average, you get bullishness. But even if it did it, where would your stop be? 34,829 is the entry, and you're going to tell me you're going to risk to 32,305. You're going to risk the 500 points roughly. I don't think most people would do that. So now you're looking to see does something else happen. Any close now back over the 18-week average, close over it in the Dow and the S&P would suddenly give the market a bullish bias over that number with the swing line up. That could change the game. So I know what I'm looking for if I'm looking to play on the longer term. I don't see it, and I don't get anything that can be a sell signal. Why? Because no matter what I do, I've got in this chart, for example, a lower low, higher high. I don't have a setup for lower highs, lower lows under the 18-week average of closes. Momentum could turn down, but you don't have that setup yet. We wait. In the Russell, higher lows, higher high. Battleground has been the 100-week moving average of closes down to the lower Bollinger Band. Why wouldn't it still be that is the support area? That's what I think it is, but there's no setup there. Still very bearish in the bonds, but not trending. Instead, what's at work is the embedded reading. Whenever you get an embedded reading, if you've taken my enhanced Bollinger Band course, it's under education on the website, www.iraepstein.com. That's where you go, you learn about this. You're waiting for rallies to get short, like over in these areas here, when you have an embedded reading, and then I teach you how to play stops and what you're looking for. Right now, this is still a very bearish situation. The same thing in the 10-year notes. The fact that it closed back over the lower Bollinger Band is a great sign. It keeps the bearishness all going, by the way. The dollar index now has 4 weeks in a row over the upper band. That's often stretching it. It's rare to get beyond 5. You'll see that often if you do your own work there. In the euro, you've been in a downtrend. Market's still falling, but it's a funny downtrend. Do you see this week here? This was an outside week up. As you know, I'm working really hard to get you a course on outside. I know it's going to be hard for me to do it now in April this just came out of left field that I've got to take this trip. This was when it was supposed to be finishing up and releasing it. So it'll be in May, very early part. But when you take that low out, it's a trap for the bulls. Bollinger Band is typically an objective. Bingo. I'm going to teach you things about that the way I did with enhanced courses on an outside day up or down that you're not used to seeing, and gives you an idea how to use it, either if you get caught in a position or you're trying to add to positions, both ways. Okay, Canadian dollar, you've gone from basically a lower Bollinger Band to an upper one. Remember, in the Bollinger Bands, it's an algorithm designed to keep the market within those bands 95% of the time. 5% they have to come out because the more you stay in them and the more the bands, if you will, contract, eventually you got to break out of it. That's called a top or a bottom. And the market will either take off to the upside or the downside, depending on the formation where it's all coming in. The Japanese yen is one of the few markets this year that I've seen that has given you on a weekly chart 6 weeks in a row under the lower Bollinger Band. There's nothing to that. 5 is the norm. I never said you buy a Bollinger Band. You've never seen me say that. You've never heard me say that you come in and you get short at the top part trying to catch the top. It makes no sense. It is a sign of how bearish this market is. It is rare that you get them. I saw one market in my career hit 9. And obviously that's 2.5 months almost of the market relentless, just breaking apart. At the end of that, you've worn the bears out, you've set a new range in the market. Typically, when it pops, it becomes untradeable for a while as the market has to develop and consolidate what it's just done. Next, Bitcoin. Bitcoin has higher lows, higher highs, but it is under the 18-week average. The support was here. If the pros bought it, and this formation I think they bought at 42,774, the risk is large at 37,180, but on weekly charts, that wouldn't surprise me that they bought that. If you get under that number, I'm looking for big support down here at 35,288 to 34,986. The differential between Brent and WTI oil, well, even though we're going to open up all these lands and allow the oil companies back on them to do things, we've got to convince the oil companies that this program makes sense for them. They don't trust the Biden administration. Why would you? They flip-flop. Once you start drilling, it's a long-term event. It's not a one-year deal. And it's a lot of money to go out and explore these lands and do it. There's got to be more to this. Higher highs, lower low, no. It's a bullish overall trend. Support's back at 337. And when you look at the energies, we've had a correction, so what? The market fell back to the 18-week average. It's trying to hold it. We'll see what happens. It got too high, but now it's trying to get its legs under it. WTI, same thing, went right into that support at that line in the sand. Again, when trends end, that's often where you go down to and you regroup and try to figure out what to do next. Rebob gasoline didn't even make the run here. It had an embedded reading, and you normally break down. Now I'm fearful of this. I'm fearful that as summer driving's going to come on, the demand's going to overwhelm the market. These highs are in peril of being taken out. You can't even break much in this market at this point. This is already with the Biden administration throwing at everybody the reserve oil. I seriously doubt they're going to do anything with the gas tax. If they do, they're just going to create more demand for the gasoline. It becomes cheaper via that tax. Doesn't make sense. So we have what we have. If the market hits the number here, I'd love it because that would finish the obligation. The only way I know it's not going to finish it is you got to go back for the high that was made when you left the embedded reading. It's pretty far away, as you can see. I want to remind you again, I will be out all of next week. I hope to be back on Sunday to do these updates. If I'm not, just not going to be able to get them done on a Sunday. Depends on the flight. I haven't even booked a return flight. I'll do it pretty much the last minute. To get our free offers, just take your cursor, move it up, click, and enjoy. I'm Ira Epstein. I will see you all Monday, not tomorrow, a week from Monday for sure. Take care.